Ever wondered why the rich never seem to keep their money in the bank? Let's uncover the secrets to smarter saving. Is your bank account really the safest place for your money, or is it just a slow drain on your wealth? Find out now. What if I told you that keeping your cash in the bank could be costing you money every day? Let's explore better ways to save. Precious metals, God's money, gold, silver, and platinum. Money is important because we use it to buy things. But did you know that paper money loses value over time? This happens because governments print more money, making each dollar worth less. This is called inflation, and it slowly eats away at your savings. That's why smart investors don't keep all their money in cash. Instead, they put some of it into precious metals like gold, silver, and platinum. These metals have been valuable for thousands of years because they are rare and cannot be created like paper money. People call them God's money because they have always held value, no matter what happens to the economy. Gold, in particular, has always been a safe investment. In the 1950s, 1 ounce of gold cost around $400, but today that same ounce is worth over $2,000. Experts predict that by 2032, gold could reach $10,000 per ounce. Unlike cash, which loses value over time, gold and other precious metals usually go up in price, making them a great way to protect wealth. Even in times of economic crisis, people rush to buy gold because they trust it more than paper money. But what if you don't want to buy and store gold physically? There's an easier way to invest: gold ETFs, exchange-traded funds. These are investment funds that allow you to own gold without needing to store it. Gold ETFs follow gold prices, so if gold's value rises, your investment grows too. They are a great option for people who want to invest in gold without the hassle of keeping physical bars or coins. Whether you buy physical gold or invest in gold ETFs, precious metals are a smart choice to protect your money from inflation. Unlike paper cash, they hold their value over time, making them one of the best and safest investments for the future. Industrial commodities, cobalt, nickel, copper. Many things we use every day, like phones, cars, and even medical equipment, are made using special metals called industrial commodities. Some of the most important ones are cobalt, nickel, and copper. These metals are valuable because they have unique properties that make them useful for industries like electronics, construction, and energy. For example, cobalt is used in batteries for electric cars. Nickel is needed for making strong stainless steel. And copper is a key material for wiring and electrical devices. Because these metals are in high demand, their prices have gone up over the years. In 2012, cobalt was selling for around $20,000 per ton, but 10 years later it had doubled to $40,000 per ton. This increase happened because more companies needed cobalt to make electric vehicle batteries. As new technologies grow, the demand for these metals will likely increase, making them a smart investment choice. Investing in industrial commodities doesn't mean you have to buy and store metal. Instead, you can invest in companies that mine these metals, such as Rio Tinto, or in mutual funds that focus on raw materials. Another option is trading commodity futures, which allow investors to make money based on price changes. Since these metals are always needed, they offer a great way to protect and grow your money over time, making them a better option than just keeping cash in the bank. Safe haven currencies: Swiss franc, British pound, Chinese yuan. Money is not always safe, especially when the economy is unstable. Some currencies lose value quickly due to inflation, wars, or financial crises. But certain currencies, called safe haven currencies, stay strong even when other currencies lose value. These include the Swiss franc, British pound, and Chinese yuan. People trust these currencies because their countries have strong economies and stable governments. That's why wealthy people and big investors often move their money into these currencies during tough times. For example, during the 2008 global financial crisis, many people rushed to buy Swiss francs because Switzerland remained stable while other countries struggled. A similar thing happened during the Russia-Ukraine conflict, when the Swiss franc gained value as people moved their money to safety. The British pound is also considered strong because of the UK's well-developed financial system. Meanwhile, the Chinese yuan has become important in international trade, especially as China grows into a global economic leader. But you don't need to be a millionaire to invest in these strong currencies. ETFs, exchange-traded funds, allow you to invest in these currencies easily without opening a foreign bank account. Another option is forex trading, where you can exchange your local currency for a safe haven currency through brokers like Forex.com. Sovereign guarantee, government securities. When you look at a dollar bill, you might see the words, "This note is legal tender for all debts, public and private." This means the government promises that the money has value. This is called a sovereign guarantee, which means the government backs the money. But since paper money loses value over time due to inflation, smart investors prefer government securities such as treasury bills, notes, and bonds. These investments are considered one of the safest ways to grow money because they are backed by the strength of the government. The U.S. government, for example, issues treasury bills, notes, and bonds to borrow money from the public. In return, the government promises to pay interest over time. Treasury bills are short-term investments that mature in a few months, notes take a few years, and bonds can last for decades. Since the U.S. government is one of the strongest in the world, its securities are considered very safe. Even during financial crises, people trust U.S. Treasury bonds because the government has never failed to pay back its debts. Investing in these securities is easier than many people think. Small investors can buy them directly from the U.S. government through Treasury, Direct.gov, or from secondary markets, where they are traded like stocks. These securities offer better returns than keeping cash in the bank, while ensuring your money remains safe. If you want a low-risk investment that grows steadily over time, government securities are a great option. Value stocks and mutual funds. Investing in the stock market is one of the best ways to grow money, but not all stocks are the same. There are two main types: growth stocks and value stocks. Growth stocks belong to companies that are still expanding and trying new ideas, like tech companies. These stocks can rise fast, but also come with a big risk because not all new companies succeed. Value stocks, on the other hand, belong to well-established companies that have been around for a long time. These companies are stable, make consistent profits, and often pay dividends, which means they give investors a share of their earnings. Investing in value stocks is a great way to build wealth over time. These stocks may not double overnight, but they increase in value steadily and provide regular income through dividends. Companies like Coca-Cola and Walmart are good examples of value stocks because they have been profitable for many years. Even during economic downturns, they remain strong because people continue buying their products. For those who don't want to spend time picking individual stocks, mutual funds are a great option. Some mutual funds focus on dividend-paying stocks, meaning investors get both price appreciation and regular income. A good example is the Vanguard High Dividend Yield Index Fund, which collects money from many investors and spreads it across top dividend-paying companies. This allows regular investors to earn from the stock market without needing expert knowledge, making it a safer and smarter choice than leaving cash in the bank. Land and real estate. Land is one of the most valuable things a person can own. Unlike cars or machines that lose value over time, land never depreciates because it is limited. Nobody can make more of it. This is why real estate, which includes houses, apartments, office buildings, and commercial spaces, has always been a smart investment. As the world's population grows, more people need places to live and work, which increases the demand for real estate. Over the years, property values have gone up despite occasional market crashes. For example, from 1992 to 2020, housing prices tripled, even though there was a big drop during the 2008 financial crisis. Many people think real estate investing requires a lot of money, but that's not always true. One easy way to invest is through real estate investment trusts, REITs. These are companies that own and manage properties, allowing small investors to invest in real estate without having to buy a house. REITs work like mutual funds. Many investors pool their money together and everyone earns a share of the profits from rent and property sales. Collectibles, vintage cars, rare art, luxury items. Not all investments come in the form of stocks, real estate, or gold. Some people grow their wealth by collecting rare and valuable items known as collectibles. These include vintage cars, rare artwork, luxury watches, first edition books, and even limited edition handbags. What makes collectibles special is that they become more valuable over time instead of losing value like regular items. The rarer an item is, the higher its price can go in the future. Wealthy people love collectibles because they are unique and act as timeless stores of value. For example, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for an unbelievable 135 million euros in 2022, making it one of the most expensive cars ever sold. Similarly, Leonardo da Vinci's painting Salvator Mundi was bought for a massive $450 million in 2017. These high prices show how rare collectibles can grow in value over time. Unlike normal cars, which lose value the moment they leave the dealership, classic cars become more valuable as they age, just like fine wine. But investing in collectibles isn't just for millionaires. Thanks to online platforms, regular people can also invest in valuable items. Websites like Whatnot let people buy and sell rare comic books, baseball cards, and action figures. If buying an entire collectible is too expensive, platforms like Convey and Masterworks allow people to own a share of high-value collectibles. This way, investors can enjoy the benefits of collectibles without needing millions of dollars. Want to grow your wealth the smart way? Subscribe Make Smart Money now and never miss out on money-saving tips. Don't let your cash lose value. Hit that subscribe button and start investing wisely today.